So the next session is entitled "The Biggest Megatrend of All?" Prospects and challenges in healthcare. To oversee matters as moderator, it's my great pleasure to introduce Lee Murray, Events Director, Healthcare Business International.
Thank you very much. Thank you, everyone. And as introduced, yes, we're here to talk about healthcare, and we don't have a huge amount of time for this absolutely massive topic. So we're going to whip through that relatively quickly. And I think I volunteered, but I think they've all kindly agreed that if you have any questions afterwards, all of the panel are more than happy to answer those and meet you afterwards. So I'll sort of kick off and introduce everybody on the panel at the moment. On the end, we have Alan Mackay, who's the managing partner and founder of GHO Capital Partners. Then we have Neil Varshney, MD, who's the founding partner of Patient Square Capital. Svenja Becker, who's the managing director and CEO of Moravia. And just on my right, we have Thierry Chignon, who is the managing partner at Merio Equity Partners. So I think the sort of the outcomes and the objectives of what we'll talk about today, we'll whip through and really give you everyone a sense of exactly why healthcare, where the biggest opportunities are, and talk a little bit about the risks that everybody's probably a little bit worried about and has been a theme of the event so far about deploying capital and what's next, and talk about why healthcare is a fascinating and incredible sector to be involved in. So Alan, I think I'll kick off with you, and I just want to talk about, so, there's been talk about this big rush and increased investor interest in healthcare over the last few years, in particular the last couple of years. So with your experience of being in the healthcare sector for a long time, how has that changed? How have the last couple of years changed, and what does that mean for GHO? Is it an exciting time for you?
Yeah, things have changed a lot in the private equity bit of healthcare, but the fundamentals in a mega trend sense are, when I and a lot of you were students, the global population was 4 billion heading to 5. It's now 6 billion heading to 7. It's just a fundamental demand driver. Everybody wants healthcare. Not everybody, in fact, not anybody can afford all the healthcare. So perfect conditions for private equity, massive demand, massive inefficiency, and people need to come up with solutions that make better and faster healthcare provision available. So why wouldn't you invest in healthcare with that backdrop? Well, there's a lot of reasons why you might take some care, but fundamentally, it's a great place to be, and it will be for a generation of private equity professionals to come. When I grew up in private equity, so in the 90s and the 2000s, I was global head of healthcare at 3i. In Europe, the pan-European generalists, 3i and Bridgepoint and HG in those days, did pretty much monopolize the mid-market healthcare, their sector teams, and they had different sector teams. For some reason, those guys all drifted off away from the sector focus that they had. They maybe got rattled by the GFC or whatever. And it just left a great big gap in the European private equity landscape. There were always some venture guys like Sofinnova and these guys, Life Science Ventures. There were always Cinven and Nordic Capital doing big healthcare. In the middle, there were some people doing it under the radar, and we'll come to Thierry, I'm sure, in a moment. But there was an opportunity to go on the radar and create. So GHO and Archimed in France both decided to fill that gap. And the only thing that surprises me is that there's not more dedicated healthcare firms, because the demographic's huge and the opportunity for a very controlled return set, depending what type of deals you try to do, is probably stronger in healthcare than any other sector I can think of, predictable.
And you raise a good point, and maybe I'll talk about more dedicated healthcare teams, and Neil, I'll pass on to you. And so you're not. I'll refer to you as a new kid on the block in terms of a fund, but obviously very experienced in your team you're building. Can you tell us a little bit about Patient Square and why you decided now was the perfect time to launch a new fund?
Yeah, thanks for the question, and nice to be here with all of you. So Patient Square, we are healthcare dedicated. We pride ourselves on being deep healthcare experts. We're global in our outreach, although we are based on the West Coast of the US. You know, what I'd say is we've deployed in this market environment, we've deployed close to $3 billion over the last 15 months. That includes our fund as well as our co-investors. What we saw was a real need in the market for healthcare specialization at scale. And what that means is there are companies in healthcare that are massively capital consuming. There are inefficiencies. I would agree with Alan that if you take a step back, the long-term trends in healthcare are outstanding. In the US alone, $4 trillion of spend. It's approaching now 20% of GDP, and that's just in the US. So it's a remarkable industry to invest in. It is time-tested through cycles. You can also have amazing outcomes for patients. So one thing that we're very focused on is having a positive impact on patient lives. It's in our name. But you can have outstanding outcomes, which is a benefit. And if you look at just a recent example, the vaccine for COVID alone, you may have seen the numbers, 20 million lives saved just in the first year. So outstanding, astounding, amazing outcomes, both financially as well as for professionals, for patients. So that's why we exist. We exist to fund and partner with companies, great management teams, in what is a very complex but very fruitful landscape, and we intend to do so at scale.
Thank you, Neil. And Thierry, I think I'll come to you and just talk about, so you have been involved in 13 years, Mario has been around in healthcare now. And so from a GP perspective, when you're looking at assets and you're looking at, okay, so is this a more competitive environment? What's the situation like now? Are you having to compete with other GPs for portfolio companies?
Well, thank you. Yes, of course. There are more and more competition. It was mentioned. It's pretty obvious. We can see a lot of generalist funds which are starting to get greater interest on healthcare and healthcare companies because the fundamentals are very good. This was mentioned earlier on. Having said that, it's a market which is having some specificities, and it's very important to well understand those if you don't want to make some mistake in terms of investment. And what we're trying to do on our side, is to have a pretty, how should I say, holistic approach or general approach in terms of typology of investment, to have some funds which are well balanced, so that if some constraints are happening at the payer level, because that does happen, even though the GDP needs to grow, it does happen, or if there are some issue at the hospital on the operating theater level, which was the case with the COVID, we've got a fund which will globally well react, even though we are facing those difficulties. So it's really a matter of well understanding. Now, I like very much what was said earlier on. I mean, we are part of the Merio group, even though we are investing as a really standalone and on the usual pure equity player. Having said that, the Merio family is 4th generation now, and in October we'll be celebrating 125 years of commitment to healthcare. Started with vaccine, human and animal vaccines, by the way, because you know that 60% of the human disease are coming from animals. So very important. And this is why the concept of One Health is well embedded in our strategy for investments. Not only to have the fund well balanced, but also to be more efficient for patient.
And so in terms of competition amongst, that's a sort of key strength, I think, is it's important in healthcare to have a good team and to have that sort of knowledge, right?
Competition is always present as part of the game. It's necessary. Having said that, we've got another particularity, but sorry, I don't want to be too long, but each of us are having, at least not only at the partner level, are having a pretty strong operating background prior to moving to private equity. Myself, I spent 20 years in industry, and the last 15 years in private equity, which means that when we're discussing with managers, it's easier and it's more efficient, and they do understand very well what we can bring in addition to just money.
Thank you, Thierry. And Svenja, coming to you, you're sort of from an LP perspective, from a fund-of-fund perspective. I think for a while, and there's been some talk at the event around sector-specific LPs. And can you just speak to a little bit about your perspective, why healthcare and some of the plans at Moravia?
Absolutely, and hello everybody from my side as well. I started to look at sector-specific thematic funds a long time ago, but to be honest, I didn't really find healthcare that interesting at that point. It was more business services, technology, other areas. And honestly, there were also not that many GPs, healthcare-specific GPs. But then in 2018, 2019, even before COVID hit, we took a special interest in the field for one of our fund-to-fund investment programs. And we did a lot of research on the field. And what we discovered made us even more interesting. It's not only the underlying trend that were already mentioned here, but it's also the outperformance that healthcare-specific funds. So just to give you a sense, 75% of healthcare-specific funds end up in the first and second quartile compared to diversified funds. And that was a number, and we did a lot of research around the numbers, and that made us really convinced that there was a business case. However, still, we didn't find the breadth of GP. There were a couple of healthcare-specific funds more in the US than in Europe. There were a few large ones like GHO or Archimede, but not that many. So in order to build a fund-to-fund program just by backing healthcare-specific fund was a challenge at that time. In the meanwhile, we have found many more. So there are a lot of emerging managers. There are spin-out like Patient Square Capital coming from larger platforms. So the industry has become, or the ecosystem has become much more interesting now as a fund-to-fund, because now you can actually build a healthcare-specific portfolio which is diversified in itself, and that makes it very interesting for us.
That diversification allows you to spread your risk and to meet all of your sort of investor demands without being too niche.
Correct.
And so I think those sort of covering a little bit about the why and what's happening, and it'd be interesting to look at the what and to talk about some of the specifics to give people a sense of the greatest opportunities that there are in terms of the verticals that healthcare, talking about that diversity, where do I start? And we as a business, we look at services in particular, which is a very small part of the sort of the wider spectrum, and even that is large with lots of opportunities. So I think perhaps, Alan, if I put you on the spot and sort of say, picking a vertical at the moment, what is really interesting and why really? What is a big opportunity?
Yeah, how do you take 20% of GDP and narrow it down to a vertical? I mean, it's just such an immense landscape in healthcare. In my own firm in GHO, we very early, we're European-based, we've got a team in the US, but we very early said we're not going to do patient services, so things that touch the patient like clinics and hospitals, and too much labor headcount, too much real estate involved, inflationary, which wasn't an issue when we were setting up 8-9 years ago. But in an inflationary environment, those are quite difficult. Labor cost inflation, asset cost, property cost inflation are quite difficult to work with. So we just made a choice to stick to B2B healthcare. And that has pushed us, although we invest in some pharma product and some medical device or diagnostic product, most of the things we're doing are service businesses that support those big device companies, those big pharma companies, and the little ones to develop their new innovations and move the medical solution forward. So in my world, I'm quite happy to be where I am, and you can then divide it by other dimensions. So if that defines where we focus by part of healthcare, we also choose to be a growth buyout investor. So we're willing to pay a higher than normal multiple for a well-managed, already well-growing, fast-growing business where its current shareholders just don't have the confidence or the capital to allow it to go across the Atlantic or into Asia or whatever the next step of market growth is for the business. So we have the confidence as well as the capital to release that. So we're not a value investor at GHO. We're not doing heavy lift turnarounds. There's nothing wrong with that. It's a really good place to be, and somebody else will be very, very good at it. But to the fund of funds point, each manager to its own particular part. I don't think anybody can cover everything in healthcare in all of the world. I think that's probably too big, although Neil may be about to try and persuade me otherwise.
I might, if I could. So we do take a bit of a different view on healthcare. We take a very broad view on healthcare. So we don't start the year saying in January we're going to pursue these one or two ideas. We find that leads to effectively jumping on the bandwagon at times and end up being a hammer looking for a nail, and a force then need to do one type of deal. We intentionally cover the full landscape of healthcare. So for us, that's 5 different verticals: development stage therapeutics, commercial stage pharmaceuticals, medical devices, providers, and tech-enabled services. And we are true students of each of those 5 categories. We study the long-term historical trends 15, 20 years before. We try to track management teams and companies in those spaces. We track how they're doing. And the reason we do that is to have a very, very broad funnel at the top so that we can be hyper-selective about which deals we actually choose to do out of those. That's been very fruitful for us. An idea, since you asked, I think an area we've been finding very, very fruitful these days is actually in the therapeutic space. And many of you saw the run-up, particularly around the peak of COVID, the sort of exuberance around biotech and the possibilities of therapeutics. We saw that, and then we were patient. We waited for that to decline. Now there are about 200 companies, publicly traded therapeutics companies, that are trading below cash. There are a series of down rounds. It's been described as an Arctic winter, and I think that's probably the right terminology. What we do is we look at that and say there are amazing valuations available, but we have to be specific about choosing great science. So we take a very long-term view, find the absolute best science, and right now is an amazing time actually to participate in the growth of those companies if you're willing to take a long-term view. Moderna, as an example, it was 10 years in the making before it found its real use case in COVID. So one has to be patient in this environment and find value, but have long-term conviction around trends.
That's a good point. And I think just looking at time, wanted to move on to looking at a little bit of the macro environment and some of the challenges that are possibly down the line. And I think there's been a conversation that we were talking about beforehand around the importance of size of fund and why size of fund matters, in particular when you're looking at how am I going to deploy capital? Is there a risk that deals are going to possibly slow down? And Thierry, just coming to you on that, I think you have a particular approach to your fundraising at the moment. What is it about a size of fund, and what do you like? And can you just talk to us a bit about the importance of that?
Thank you. What we have decided to do is to remain at if I may say, a smaller size of the fund. Previous one was 375. This one is up to 600 million. And the reason why we wanted to keep it at that level is because we are starting to have a very, very strong specialization in terms of geography, Western Europe and Northern Europe, and on size of the companies that are SMEs. And we didn't want to encounter the pitfall of going to a larger fund and then having some difficulties identifying relevant targets. So this is why we decided to keep it at that level. Apparently, LPs do appreciate what we are doing because we are moving pretty well in our fundraising. Having said that, on those small and medium-sized enterprise company, it's not because I'm just taking advantage of the previous question. Okay, you had one sector, you had 5 sectors on the. Actually, we have identified 7 subsectors, and I won't go through the 7. Don't worry, I can do that afterwards with great pleasure. But there are some diamonds in terms of opportunities on companies in all of these subsegments. It's really a matter of cherry picking the relevant one. And we are doing a lot, which is, I think, pretty well appreciated by our investors. We are doing a lot of proprietary deals. We are having the name Merieux, which is a super duper door opener. It's far insufficient to go down to the end, but at least it's a good start. And then we're supporting the company with a network of the Mary Group, which is kind of exceptional and which is helping us to have some very strong relationship with the management. So see why we are kind of maybe a different type of animal, even though we are acting as a pure, again, private equity player.
Okay. And just jumping back again onto a different thing, just looking at fund sizes, we've got sort of middle market in terms of some, and then Neil, you operate on both sides of the middle market, and I'm keen to understand you're still fundraising, so I can't really ask you specifically about the size of the fund, but I can say that for a first fund, it's pretty sizable so far. And you look at large cap. Are you slightly worried around how, just thinking about fund size being important, how you're going to manage sort of the next few years in terms of actually deploying that level of capital? Can you just talk?
Yeah, I mean, I think if we only did large cap private equity, we would be worried. But by design, we actually are very involved. Think about us as everything on sort of either side of middle market and not venture. So we are very involved in growth equity investing, as well as large cap private equity investing. We're finding a great wealth of opportunities in growth investing, and candidly, even on the large cap side, but paying attention to what the market is giving us. So we're big proponents of really leaning into the current market conditions. In the last year, we've done 3 take privates. We've done 1 rescue financing in a public company. So we're finding really interesting ways to deploy capital, even though the financing markets for traditional buyouts are very challenged.
So you're not particularly too worried about what's coming down the line. You're prepared for both sides.
We're the opposite. We're very enthusiastic that we're in the market.
Okay, good. We've got a few minutes left. I was thinking one of the other big draws for healthcare, and one of the perhaps a misnomer that people think of is people refer to healthcare as being very, I suppose, recession-proof maybe, or looking at the idea. Sven, you mentioned conversation from a panel earlier this morning about being a defensive sector. I mean, how true is that statement, Sven, in terms of healthcare? Is it a defensive sector? Is it recession-proof? What are some of is anything recession-proof?
I think we are active in an industry that's cyclical, and even though there are parts or sectors in this industry that are less cyclical than others, I am not a big believer per se in saying healthcare is defensive. I think there are areas within healthcare that can be classified as being defensive, but there are certainly areas, and we have seen it, for example, in health tech, that are more cyclical and volatile and still going with a wider market, being correlated to the wider tech market in that case. So per se, I wouldn't say healthcare is defensive, but having healthcare as part of an investment strategy makes a lot of sense, absolutely, from an LP's perspective.
And from a GP perspective, thinking about dealing with inflation in particular, and cost of living, cost of energy, I suppose in services and the like. If you were looking at and then thinking, well, I can pass on a certain level of my cost to my end payer, right? And in some markets that operates slightly differently, perhaps in the US that is different to certainly to the UK. I mean, Thierry, what's your sort of thought on that? Is there an ability to just sort of keep passing that inflationary cost on? Where's the limit?
Well, it really depends, again, of the segment, and this is why we are very keen on having this balanced portfolio, because by definition, if you are in an area where the payers are reimbursing 100% of the cost, which does happen, inpatient, for example, private clinics, you can understand that it's not that easy, or it will take some time to get the negotiation and get the price being increased. On the contrary, same for a therapeutic product, which will be reimbursed by your payers. On the contrary, if you're in the B2B business with some pharma companies where the cost could remain pretty small as compared to the final cost of the product, or if you're in a more direct-to-consumer product, such as a food supplement, you can go directly with some increase. So it really depends on the type of business model, the company in which you have invested, is working with. And based on that, it's important, as you were rightly saying, I would not say it's defensive, it's a combination of your different investment which will make the fund defensive at the end of the day.
Alan, did you have any sort of final thoughts? We're close to time on
Yeah,
that.
I mean, just very quickly, I think it depends which bit of healthcare. I mean, if, with the exception of the US and Germany, there's a public payer element of healthcare provision, which is clearly going to be stressed with everything that's going on a geopolitical level. So, but there are smart ways around that. I mean, you can invent models which lower the cost of delivering the care, and suddenly you've got a high growth business because you've got a smarter model. In my world, where a lot of it depends on the cash inflow to developing new therapeutics, new drugs, new devices, you know, people say, oh, the public biotech market is closed at the moment, so there must be a funding issue. Well, if you look at all of the public biotechs, they've got about 2.5 years of cash at current cash burn rate. If you look at the dry powder and life science venture globally, still at an all-time high, it hasn't eroded. And if you look at the cash profits of big pharma, big biopharma, where between a third and a half is going to come into developing new stuff, it's at all-time record highs on the back of the pandemic. So, you know, I see actually, if you look at the reality of what it is, there are bits of it which have got very favorable conditions. You've got other bits of it where you've got to be smart around it. So having an old, consistent, but probably expensive way of delivery in a European country, excluding Germany, is quite difficult to get paid for. But if you can invent a new way of doing it, and strangely Germany, despite being the best funded in Europe, is actually an innovator of even lower cost models, then you can have a great private equity business in the middle of an economic recession.
I think we're at time, so that's a really good point, the importance of the business model and getting that right and being specific on that. So thank you very much for everyone. As I mentioned, everyone, all the panelists are more than happy to answer any questions you might have off stage. And thank you to the panelists as well.